Hello, everyone. Tony here. In a roller coaster week for US equity markets, optimism surrounding potential trade agreements and reassurance from Fed officials that they stood ready to stabilize markets if required led to a strong finish on Friday and also helped markets lock in strong weekly gains. Further gains have been seen this morning with US equity futures gaining rapidly following announcements of tariff exemptions on smartphones, computers, and semiconductors, which came after markets closed on Friday. However, over the weekend, President Trump took to social media disputing the tariff exemptions, describing them as a reclassification rather than a cancellation. Adding complexity to the landscape for traders this week, China retaliated this morning by stopping the export of rare earth minerals to the US, which is a crucial component and a vulnerability for American industries. This marks a significant escalation in the ongoing US China trade tensions, with the threat of permanent trade decoupling looming large. Despite last week's tariff pause and exemptions easing some concerns and immediate downside risks, persistent trade policy uncertainty weighs heavily on business confidence and investment decisions and is expected to keep recession risks elevated. And that is also likely to ensure another week of volatility in markets. Let's take a look at the charts of the Nasdaq and the S&P 500 to see where they are as they start this new week. All right, this time last week, we spoke about the idea of this being a wave 3 or a wave C. This was the low we hit on Monday. At this point of time, we have got the third leg or wave C of the decline from this record high being just a little bit deeper than the first wave or wave A of the decline. So wave A, you can see here, was 3,070 points. The wave 2 took us up to this high here at the end of March, and then wave 3 has been 3,750 points. Now, where does that leave us? Well, it does leave us, I think, when we spoke last week, talking about expectations for a bounce back towards 18,500, a short covering rally, if you like. And that's played out reasonably as expected. It has actually gone a little bit further than I expected, I should say. But in terms of where it leaves us, the jury is still out. And we have a $1 million question as to whether this low here finished a correction, which would be a wave C, A, B, C, a three-wave correction, or it is in fact a wave 4 bounce before another leg lower, which would be the wave 5. Remember, in Elliott wave, we're talking about 5-wave impulsive declines or rallies. So the jury is out. And what we do know is that while the NASDAQ remains below horizontal resistance coming in around 19,500 and below this 200-day moving average, which comes in around 20,250, I see there as being an opportunity for another push lower down towards potentially 16,000, which would complete a 5-wave decline. However, if we saw the NASDAQ rather get above this 19,500 area and above this 200-day moving average on a sustained basis, I would be looking to move my interpretation to one that this has been a correction and we're going to retest the record highs. Now, I just cannot see that playing out at this point of time. So for me, the base case is that this rally from the last Monday low is still a bear market rally, a short squeeze. However way you would like to call it, a wave 4 in Elliott wave is the other way of describing it, before another leg lower. But all will be revealed in terms of how we see rejection or acceptance of these levels up here in the week ahead. For the S&P 500, a similar story. We spoke about this being a wave 3 or a wave C low. This is the Monday sell-off from last Monday, and that we were looking for a counter trend or a corrective rally. The corrective rally, we spoke about getting towards 5,400. It's gone a little bit further than that, but we still have room for it to explore higher levels and still be a wave 4 before another leg lower. So we really need to see how it reacts, firstly, to this resistance around 5,500. You have these lows here. And of course, you have this high from last Wednesday coming in around 5,481. So 5,500 is the first resistance level. And above here, you've got the 200-day moving average sitting at 5,750. So at this point of time, a push into this area doesn't discount the idea that we've got another leg lower. And as I said, given the fact in the presentation I just mentioned during or pre we looked at these charts, I just feel like that we do have ongoing uncertainties. There is still very large risk to growth and to trade. And for me, in a macro sense, this bounce is more than likely a wave four before another leg lower. Thank you for listening and have a great week ahead.